Welcome to the AI Fin News channel. The most relevant news and analysis from the world of finance and cryptocurrencies.
Greetings, friends, on the AI Fin News channel. Interesting developments are happening with the price of Bitcoin, and the cryptocurrency market continues its journey. However, interesting data from related markets can have a certain influence on the cryptocurrency market, and that's where we'll begin. However, the markets are just starting to heat up, and first, let's focus on events in related markets. Let's recall our Sunday video where we discussed various factors influencing the price of Bitcoin and other cryptocurrencies. One such factor is the closure of Bitcoin futures, which often comes with increased volatility. It's important to note that October is the month of Bitcoin and Ethereum options expiration. The largest expiration was in June, totaling $3 billion. Also, October marks the end of the quarter and the fiscal year in the United States. This week, the fate of the U.S. government's operations may also be determined, depending on the agreement between Republicans and Democrats. These factors can influence the market. Speaking of derivatives, we see hedge fund activity regarding short positions in stocks. This is related to the pessimistic sentiment in the stock market caused by various factors, including the actions of the Federal Reserve. The topic of oil is also relevant, with banks forecasting that oil prices could reach $100 per barrel. This week, we see that WTI crude oil is trading above $90 per barrel. As for cryptocurrencies, we see a small outflow from Bitcoin, but hedge funds have also reduced their short positions in Bitcoin. Altcoins are experiencing a small influx of capital. This indicates the continued weakness of hedge funds. In conclusion, I want to draw your attention to the topic of golden crosses. This signal, related to the crossing of certain moving averages, can indicate future problems for stocks. The US dollar has received a golden cross for the first time since July 2021, which could be a signal of future instability in the stock market. But, as always, anything is possible with markets. This works like this: it's a psychological moment to have something to talk about. However, again, we see that the euro and the Swiss franc haven't shown strong movements yet, and I haven't looked at the British pound and other currencies that make up the dollar index. Nevertheless, even from a technical point of view, the situation is not very favorable for assets that don't like the rise of the dollar index, including possibly Bitcoin. Some issues arise that may be more serious than just technical aspects. Analysts point out that the current situation with corporate bonds, which offer a higher yield than stocks, even taking inflation into account, is noteworthy. The additional yield investors get from stocks is the lowest it's been in the past 20 years. This is an important signal that suggests that stocks may face problems in the short term. This could also affect Bitcoin. Here, some issues arise that may be more serious than just technical aspects. Analysts point out that the current situation with corporate bonds, which offer a higher yield than stocks, even taking inflation into account, is noteworthy. The additional yield investors get from stocks is the lowest it's been in the past 20 years. This is an important signal that suggests that stocks may face problems in the short term. This could also affect. There is an opinion that investments in risk-free government bonds are becoming more attractive as they offer relatively higher yields. Such bonds are considered risk-free because they are backed by the U.S. government, which has never defaulted on its debt. The difference between the dividend yield of the S&P 500 and the yield of 10-year Treasury bonds shows that the attractiveness of stock investments has declined. This trend has been ongoing for several weeks now. In summary, the high yield of bonds may put pressure on stocks and other risky assets. However, the situation is complex, and other factors, such as the state of the U.S. economy and global events, should also be taken into account. Markets are always changing, and one cannot rely solely on one chart or one event.
Subscribe if for some reason you're not already subscribed. Please click on the bell so you don't miss out on new videos, because there will be more to come. Bye bye.